Hello and welcome to the YCharts May monthly market wrap. My name is Joe Clevin with the YCharts team, and I'm here to take you through all the happenings in the markets during the month of May. Let's get to it. We start off with the age-old Wall Street saying, sell in May and go away. And this time of year always brings about a debate whether or not this phrase has any true merit. The results this year are rather mixed. There was some selling in the early to middle part of May, but those losses were quickly recouped, and the S&P 500 and NASDAQ both ended around their pre-May levels. It should also be noted that the bullish investor sentiment did taper off steadily over May, so investors will have to wait and see if the selling behavior will persist over the summer. And our Off the YCharts segment this month deals with inflating inflation. The big story is that the U.S. inflation rate hit a 10-year high, while other PPIs and consumer goods prices hit all-time highs or relative highs as well. Inflation is something that can be dire to many portfolios, but also to your wallet and to the wallets of your clients. So in order to leverage inflation in client communication, let's hop into the YCharts tool and recreate this particular visual. So we have US inflation rate, PPI for lumber and wood products, which has been in the news a lot lately, retail gas price, and the PPI for passenger car rentals. If we want to illustrate any averages or minimums to depict whether or not things were at a low or whether or not things are at a relative high or a relative low, we can simply go to annotate, and next to the settings gear for the desired metric, click that average line or a min or max line. And that is how you can illustrate inflation and its effects using fundamental charts in YCharts in just a few clicks. Now back to the market wrap. Market performers this month, the ex-US were the big outperformers. Emerging markets posted a 2.3% rise, while developed markets were up 3.4%. Here at home, the S&P 500 tacked on a modest 0.7%, while the NASDAQ shed almost 1.5%. 8 out of the 11 sectors were higher in May. The leader was energy with a 5.7% increase, followed by materials rising 5.1%, and financials in a close third at 4.8%. The three laggards were technology, down nearly 1%, as well as utilities, down 2.3%, and finally the caboose, consumer discretionary, down 3.4%. In the top 10 hot stocks of the month in the S&P 500, oil, steel, and gold stocks were particularly leading the way. Shares of Nucor, Baker Hughes, Newmont, and Schlumberger were all higher as these cyclically sensitive names benefited from reopening. And the 10 laggards and losers, the 10 worst performing S&P 500 stocks, was consumer cyclical and technology names taking a dive. Shares of Etsy, Dollar Tree, HP, Paycom Software, CarMax, and Ball were all lower, mostly on disappointing earnings and guidance results. Shares of Tesla were also down 12%, but for their own reasons. The average sale price of a Tesla fetched about 10% less than it did a year ago, as well as some confusion surrounding a speculative sale on Tesla's held Bitcoin assets. And finally, in economic data, unemployment insurance claims hit again a pandemic low. As of the May 22nd tape, weekly insurance claims were only at 406,000 compared to over 6 million that they were at the start of the pandemic. And so hopefully that number will tick even further down as reopening starts to happen and the world gets back to normal. And that does it here for us at YCharts with the May market wrap. We want to thank you again, as always, for joining us. And if you haven't already, we'd love for you to subscribe so you can take advantage of all of our great content mediums, including our YouTube channel, where we have anything from tutorials on the YCharts tool to new product releases. Please make sure to check out our market wraps, as well as our YCharts blog, where you can stay up to date on all of the happenings in the markets and be the first to know about YCharts tools and product enhancements. Thanks again for joining us, and we'll see you back here first week of July for the June market wrap.